Everything in this video is not intended as financial investment advice and is for educational purposes only. I'm Josh Olszewicz, head of research at Valkyrie. And let's take a look at the midweek market update. I'm going to start with the usual rates and inflation discussion. At least in the US, inflation has improved based on a real-time estimate quite substantially. I think everyone is still feeling the effects of inflation, regardless of what, a percentage statistical number would say. Trueflation comes in at 4.3 year over year, currently slightly up. It reached just below 4 there the other day. CPI last reported 6%. The next CPI print will be next week on the 12th, along with the ETH protocol upgrade on the 12th. So that should be a very interesting day, as maybe sideways and uninteresting the markets have been over the past week. I think the combination of the two events on the same day, we're bound to have some fireworks one way or the other. I'll get to the ETH staking unlock in a second. But we will see what the inflation estimates are when we get closer to that day next week. If I had Trueflation as my only gauge, I'd say, well, CPI should come in quite substantially lower than the last print. And that may indicate we are closer to the end of hiking than we even think. It may mean just hold here for longer. These are the current rate probabilities, kind of seesawing around another 25-point hike or not. But the market continues to be optimistic and pricing in the probability of cuts until September 2024. Just prior to SVB, as a reminder, the market was pricing in significant raises. So I would take these with a grain of salt, but it just gives you a sense of what sentiment is like currently based on these probabilities. One thing that's going to put a bee in the bonnet of the Fed is OPEC cutting in a surprise fashion, which likely means should demand rise and supply reduce, that prices will go up, and that will have upward pressure on inflationary metrics, energy-related prices, that sort of thing. If we look at Trueflation's gauge of energy year over year, we can see after the Ukraine invasion, utilities as a group, this includes many subcategories, but as a group, continue to rise month over month, and then finally came down sort of towards the end of 2022, but we're coming into the summer months, along with a cut in global supply of oil, could bump price up significantly. Oil prices, market traded oil prices were up. They gapped up over the weekend, 6 to 8%, I think it was. Something else that's baked into this whole conversation is the SPR, Strategic Petroleum Reserve, which is at like a 40-year low. And whether or not that needs to be refilled at some point in time, whether or not we'll need the remainder of that oil, we'll see. But over the past year, probably, I think the SPR was being used sort of as a counter against these high prices as the oil was being released. And we can also look at things like natural gas, which sort of have peaked and are down significantly year over year. Less important in the summer months, I'd say, for some of the country that uses a majority of the natural gas for their heating needs, but also something to watch. And as we all know, gas prices, for most of us who drive on a regular basis, certainly higher than they were over the past 4 years, excluding 2022. But we can see how the seasonality sort of plays into this. You can see how inflation played into this. And this is sort of downstream, but this price is downstream of what happens with OPEC and everything else in the market. But I think based on a sentiment general public survey analysis, most people use gas prices as a gauge for inflation or as a gauge for sort of how well the president is doing. So it'll be interesting to see if gas prices continue to rise off this OPEC news, off seasonality, and then if the SPR gets drained, as an attempt to quell any rises in energy prices. We'll see. Lots of moving parts there. One thing out that has also risen is the general liquidity in the US ecosystem. While not QE, certainly wasn't QT, what we did, we being the Fed and FDIC, injecting that liquidity into the ecosystem. So in general, this has mirrored crypto prices, risk assets. You can see where COVID went into overdrive with liquidity in the ecosystem. So if liquidity is rising, it is hard to be bearish on the back of that. On top of that, we also have technical weakness in the DXY, which is a index of the USD against other currencies around the world, mainly the euro. And this continues to show not only trend weakness on the cloud here, but also looks like it's ready to revisit the previous range that was in the multi-year range here. And potentially, let's say you want to measure this as a reversal pattern. This is highly optimistic for risk assets, but somewhere 90 to 95 is how this measures. Let's say this is an inverted cup and handle or something along those lines. But the DXY certainly looks significantly less bullish than it did in 2022. Unsurprisingly, gold, XAU, USD also looks extremely strong on technicals. Not only does it have a multi-decade cup and handle, but it's got essentially just a vanilla all-time high retest here above 2000. So DXY weakness may continue to drive many things in risk markets and even commodity markets. Flipping gears to crypto, this was in the weekly piece we put out talking about the fluctuations in stablecoin circulating supplies. And really there's been 5, maybe 6 key events, if you count FTX blowing up, that have sort of shaped how the stablecoin circulating supplies have adjusted dramatically. Blue, we have Tether here, which is almost back to all-time highs. USDC, which at one point in time in the red was sort of touted as the next big stablecoin to take over for USDC. And then BUSD in the yellow here, which grew substantially thanks to its use on Binance, but now can only be redeemed. So there's been a ton of moving and shaking along here based on these events. And I think the harsh regulatory environment for digital assets in general is pushing a lot of the activity offshore, which is where Tether would shine. There continues to be problems, at least with sentiment associated with USDC, even though it's back to its dollar market price. So as a gauge for US sort of onshore sentiment, USDC might be a good proxy for that. Watching the circulating supply, which continues to get drained. Almost every day we have a new exchange saying that they either are shutting down or they are having trouble with USD bank deposits. Eventually that's going to catch up with us as an industry, in prices, in the US at least. Hong Kong has been seemingly optimistic about the regulatory landscape and regulatory clarity there. So that's the one silver lining we've got going on for us globally. But I think the all clear signal in the US will be when USDC starts to get issued again and not redeemed. Their reserves to me are the cleanest of the bunch, held at BNY Mellon, managed by BlackRock, cash and short-term US treasuries. That's to me the gold standard. So I'm having a hard time understanding exactly why we're continuing to see redemptions out of USDC, if not for just a general view on regulation around the digital asset industry. Moving on to ETH, like I said in the open, next week is the staking unlock for ETH. If we look at all this ETH that's ever been staked and we look at when it was staked based on price, in this top graph here, you can see that we're essentially 50-50 based on price. So depending on how you want to think about this, there may be a vast majority of this ETH that gets unlocked because it's in profit of this 50% bucket. I think the balanced take would be, yes, a certain percentage of this ETH is going to get unlocked because anything above 32 ETH in a validator in the proof of stake ecosystem doesn't give you a bonus, doesn't give you extra yield. So you're going to effectively prune that and roll it off into a new validator, potentially. Then you've got 50% of all the ETH that's underwater. Maybe individuals unlock that to realize those losses. Maybe they don't, right? But at the end of the day, this is a lot of ETH that will be more liquid than it was before. We'll put it like that. And it's going to take time. If we look at this graph here, this isn't like the ETH gets unlocked and then all of a sudden we can send it to an exchange. It's going to take days, potentially even months to unlock all this ETH, depending on how much gets unlocked. So it's going to be a very fluid situation and we'll be able to see everything real time. But we've got, Celsius as one example of a big entity that has staked ETH. We've got Kraken, who by the SEC's mandate has to unlock that ETH. So many people are very bearish on post ETH unlock. I think it's fair to be bearish on the unlock for price in the very near term after the 12th. But I think once the dust clears for ETH in general, it's best that these staked assets are fluid. As far as technicals are concerned, for Bitcoin, we are getting closer to halving by the day. We have about a year and change to the next halving. can see the previous halving periods here, where the block reward has halved about every 4 years. And you can see where we've sat based on the 200-week moving average in the green here, as well as the power law corridor, which was established around 2018 based on the previous all-time highs. So in my mind, it's done a pretty good job now with forward testing, real-time use since 2018, and continues to signal to me that we're closer to the bottom than we are at the top, certainly on this, if this was an oscillator, let's say. So things look great on that front. If we zoom in a little bit and we get a little busy here on the daily chart, based on trend technicals, the cloud, the first thing to notice is we are above that daily cloud. Price-wise, we're above the 200-week moving average, like I said, the previous chart in the red there. And we've got all sorts of chart pattern soup du jour here. We've got this macro inverted head and shoulders, this multi-month pattern that we broke out of a few weeks ago now. The right shoulder essentially shaped into some sort of megaphone pattern. And then we've even got this past 2 week, let's say, bull flag, bull pennant going on for us. So none of these are bearish. None of them suggest bearish reversal. The big 2 patterns suggest a move in the 30s pretty easily here. And this consolidation sort of matches the duration and consolidation that we experienced on the way down. So nothing out of the ordinary here. I like that we're consolidating above the 200. I like that we're consolidating above the yearly pivot. The cloud is signaling this potential reversal based on overbought conditions. But other than that, we look ready for further moves higher. Should we start to close below the yearly pivot at 26.7 or this blue line here, the Tenkan, then we risk a mean reversion to somewhere around 24.6. But all in all, it is hard to be bearish here based on any technical I'm able to identify. Even on the lower time frames, this is a 4-hour, we've had 2 chances at least here with 2 different types of chart patterns, a diamond top and an inverted Adam and Eve, which just refused to break down. We even had some sort of coordinated FUD effort saying that CZ, the CEO of Binance, had an Interpol red notice. Okay, so silly stuff like that. The market moved on that pretty substantially, but has recovered since then. So general outlook continues to be bullish on the BTC front. And then for ETH, again, it's all up to that April 12th deadline. We've got CPI, we've got ETH unlocking. Even so, we continue to push highs here on ETH. Slowly but surely, we're creeping up to the top of this range. So it's hard to be bearish in the very ultra near term, at least for the next week. We may see a move into the 2000s before the 12th, and then things get rather angry as the chickens come home to roost in the supply side of things. I think it's just a very hard event to predict as bearish as just common sense would tell you, a bunch of supplies being unlocked. With digital assets, sometimes you just never know. So it's hard to say, I want to short this at April 12th because of XYZ reason. For me looking at this here, we're coming out of a multi-month range with a tailwind of the entirety of Q1 being rather bullish across the board. So that's all for this one. Things look excellent based on prices. Regulatory issues aside, markets continue to slowly creep higher here. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.